Where are property investors buying right now? These are the questions, the big questions that we unpacked in this live session with Mike Mortlock from MCG Quantity Surveillance. We also unpacked why are they selling? Like, what is turning people off property investing? Because it is a hard game out there. There's so many things happening. Government taxes, government regulation. There's also higher interest rates, higher cost of living. All these things are impacting why and where property investors are buying. This was a huge conversation where we unpacked, well, what was the top SA3 for 2024, 2025? And what does that mean for your property investing? These are things you need to be considering and tuning into. And we talked about, well, where are property investors buying? So as we move into 2026 next year, you want to really understand the good and inside word. So we spoke about even things about how much is AI investing influencing property. So all things that are going to be making a big impact upon your property investing now and going forward. But most importantly, where are those gold nuggets? So Mike dropped plenty, and Heather Jordan, our special guest co-host, also dropped plenty as well. It was an amazing session, one to tune into if you want to learn where property investors are buying right now. Hey everybody, I'm Jeff Miles, and together with Joe Tucker, we've created Australia's largest property investment Facebook group with over now 84,000 property investors. Now, each week we interview the top property investment experts, and this is no different. This week we've got Mike Mortlock from MCG Quantity Surveyors and also PIPA, Property Investment Professionals of Australia, in this session, along with Heather Jordan of Jordan Advisory. So it's going to be a huge session. Let's dive in.
So the annual investor survey is really, really important for PIPA, and I would argue for property investors more as well as property investment professionals, because it enables us to take the pulse of how investors are feeling, and that kind of informs advocacy and strategy work that PIPA does. For example, if we think about some legislation that came in Queensland, where they were talking about those land tax changes, I think Todd Sloan did a great little video where he was talking about getting a cup of coffee in Adelaide and then in Victoria, and that affected the price of his cup of coffee in Melbourne. That was something that PIPA got onto the front foot with in concert with the REIQ. And I really believe those two institutions together are the reason why that legislation was repealed. I think that would have been a terrible thing for property investors. And, there's examples of things that can't be stopped, like the Victorian land tax down there. But PIPA is really important because investors aren't necessarily supported at things like the state policy and residential tenancies, and we kind of need people to understand the value that investors bring. So this is an opportunity for people to share how they're feeling, where they might be selling property and for what reasons, where they're looking at buying, what their cash flow looks like. So it's a really good snapshot, and I'd like to thank the group for participating as we put that up, and we had some submissions there as well.
You're welcome. So
850, like 850 people answered that survey. That's pretty hectic, and I think and that's all across Australia.
Yes, yeah,
amazing.
Yeah, I mean, we would love it to be more. There's over 1 million property investors, and the more data that we can get, the better on that. But even with that sample size, which we would ideally like to be 1,000 plus, it does give us a pretty good insight into how investors are feeling.
Yeah, which I think is fascinating. So the Property Investment Professionals of Australia is what PIPA stands for. And the way that I understand it is that they are promoting, like they're the voice for investors. So they're our voice.
Well, in the Property Investment Professionals of Australia, so there is actually an investor institute, that's the Property Investors Council of Australia. So PICA and PIPA work quite closely together, as we do with REBA, the Real Estate Buyers Agents Association. So PIPA is really designed for the property investment professionals, which of course then helps the consumer. So it's all about making sure that we've got industry standards, where we have members that are doing CPD, they're adequately insured, and it has also a complaints handling mechanism within it. So if you are working with, let's say, a mortgage broker or a financial planner or a buyer's agent that's part of PIPA, and something was to go wrong or there was something to happen, then you've got sort of recourse to accelerate that. And unfortunately, the barriers to entry in property advice in certain sectors are very, very low. So we do kind of want that protection. At the end of the day, it's big biscuits, it's people's livelihoods and financial futures. So that's what we're all about, is protecting the people by upskilling the professionals in the industry and keeping them on the right track.
I'll suppose expose some of your property sort of mastery, I would say, because you are a little fairly active in the property flipping space. Are you seeing that there's and I'm dovetailing off Mike's sort of point about, I consider a flip, yes, there's the renovation, but there's also the people that are deliberately entering a market to know to then sort of offload the properties. Are you seeing more? I think apparently, yes, somebody's upset about property flipping, but no. So on that, oh, good. On that point, are you seeing more and more people coming to those communities and saying, well, hey, it's too hard to buy in, I'm going to buy a property, flip it, and then move it on elsewhere, whether that be renovating or buying a particular spot and then deciding to sell? Is that what you're seeing as well, Heather?
Yeah, so I mean, property flipping has definitely changed in the last 5 years. Yeah. The margins are not the same as what they were. And we've got a lot more people coming in because people are saying, okay, well, now I see that it's a chunk cash strategy. It means that I can potentially get into a property, whereas maybe before they thought that they couldn't. And so what I love about property flipping is that I feel it's very safe. So all those things that Mike just mentioned about policy and all those things almost go away for me when I'm property flipping, because I'm in and out in a very select period of time. And I'm managing the growth. I'm not waiting on markets or anything like that. And so, but what we're seeing is that people are finding it hard to even find a flip. Now, there's still plenty out there, and I'm not saying that it's the end of flipping. I'm just saying it's not lucrative like it was. And I think people who haven't given it a go before are looking at it going, this is really hard. I had somebody comment on a post I put on an accountant's page saying, I said, they were talking about somebody needing money. And I'm like, hey, listen, like I will tell anybody who listens, do a property flip. Like it's money in the next few months and significant money. And they immediately said, oh yeah, like easy money. I'm thinking, I've never told anybody it's easy money. That was not part of the equation. So the property flipping, it is happening. It helps you avoid those things that Mike was talking about. But yeah, it's not as lucrative as it was. That's for sure.
What are you seeing about? I mean, regional South Australia, Paralowie is not regional South Australia. That's Adelaide. But Burton maybe is a little bit further up, north of Adelaide. These are is regional. So yes, Ipswich is regional Queensland, regional Brisbane. But what are you seeing in terms of Adelaide, Mike? Are you getting much investor activity down that way in terms of your reports, or is that sort of coming off the boil quite a bit?
Yeah, I think it's definitely, peak of the market, and it's still kind of humming away a little bit, but it got smashed pretty hard and fast. And I really kind of think 2013 and 14, and to some extent 15, it was really the three markets that were driving all of the national growth in Brisbane, Adelaide, and Perth. So yeah, I mean Adelaide, it's an interesting case. I mean, I'm not a hot spotter. I don't spend my time analysing these markets. I mean, I have my own curious interests, and I like looking at the data. So we are just really reporting where people are going. But we're seeing Victoria be way more popular than South Australia. I mean, South Australia is not in the top 3 states for our investors.
Yeah. And Heather, I'll throw to you. I know it's a little bit outside of your mandate, being the Gold Coast, but do you sort of see or hear much about on the ground of what's happening in Ipswich, because there is still a lot of interest there. But are you sort of seeing your investors and people you're conversing with? What are they seeing in Ipswich, or what are you doing out that way?
So the great thing about Ipswich is that it was outside the Brisbane city, but you can still drive a reasonable distance into work if you're in the CBD, or you can get public transport to the CBD. So Ipswich is one of those outskirt of a city towns, and it, for a very long period of time, was low socio-economic, and the housing was similar. And so there was opportunity there, a lot of opportunity, and it still continues to have a mix in that social scheme. But as people have gone into those markets, obviously then that changes the social mix in those areas. So yes, I think there is still good properties in Ipswich. It surprises me when I look at Ipswich as how much it has grown since I first started looking at Ipswich 10 years ago. It is significant. But yeah, still a lot of opportunity for especially flips and things like that. Booville, I think, where is Booville? Is that over near the entertainment centre? I've got a feeling that's, I don't really know that side of town so much.
There's a little bit of flooding issue in Ipswich, so there is a perception that half of Ipswich floods. So just be mindful of that when anybody's buying there. And look, there's a really small amount of flooding up in the Paralawi sort of region, having sort of investigated that. But yeah,
Ipswich Council does an amazing flood mapping, and it will actually show you. So you can just jump online. Anyone can look at it. It's public information. Type in the address that you're looking for, and it'll actually tell you what year it flooded. So they've had some significant floods, and it'll tell you, yes, it got hit in the 2017 flood, but no, not in the 2010 flood. And you can kind of get an understanding from that as to how serious the flooding is. And then probably just also keep in mind that the way that the insurance works around there is, even if your house didn't flood, and again, not advice, but even if your house didn't flood, but the flood hit your boundary line, you will be classified as flood. So, trying to understand what the difference is there too can be the difference in the value of a property.
Yeah. Where are you guys seeing the better cash flow focused properties with strong fundamentals for growth also? So he wants a bit of cake and he wants to eat it as well.
He wants a unicorn. Isn't that what the forum's about? I want to be anonymous, and I want the best location for capital growth with the best yield. And I want you to tell me free.
Being purchased in that affordable range. Let's say so he's looking for what 70 to 80% of Australia are looking for. Sorry, Dean, about giving you a little bit of slack, mate, but he's probably okay. So he said regional metro houses or townhouses and apartments, because that's an interesting one. The survey didn't say, did it break down whether people are, or do you have any data as to whether people are looking at townhouses or houses, Mike? And then I want to go to Heather, see what I'm sure she has a lot of views on this, or some views.
Yeah. Well, it did cast some light on regional versus capital city. So regional Victoria was the most popular at 19.3%. Regional Queensland was next at 13%, and then New South Wales underneath that. So look, regions offering a strong case from that affordability point, right? And we're very unlikely to get a rate cut this year. I think Oxford Economics are saying February they expect it to happen, because they do believe that inflation is, broadly speaking, cooling. This is just perhaps a short-term sort of thing. So yeah, regions have got some great opportunities from a price point, and I feel like in terms of the capital city to regional kind of cycles, regions are actually kind of pushing up to the sort of higher point of the elasticity of that relationship, where we've kind of found that units have actually kind of split from houses to some degree. So at the REBA conference, Terry Ryder was speaking there, and he was actually very, very bullish on units. But we have to sort of be careful to understand, what are we talking about there? Is that a unit? Is that an apartment? Is it high rise, or is it a walk up? It's most likely not to be high rise high-rise apartments, even though it is kind of an interesting thing to observe that these projects aren't stacking like they have been. So the pipeline of high density residential is diminished. So that sort of begs the question, well, should it see better results? Well, probably yes, but I still wouldn't be touching high-rise apartments myself personally. But it's some of those, 1950s, 60s build where the defects have long been identified and they're pretty bulletproof things. And if you look at some blue chip locations in places like Brisbane and Sydney, the differential between a unit and a house is massive. It's like half the price. So for people that value those school catchments and those areas, it's an opportunity to purchase in those locations without the huge premium of a house. I think traditionally we've always seen houses outperform units, but every now and then that elasticity kind of stretches, and then we get that sort of coming back a little bit. So both from a price point, units can make sense from an affordability, and also the prospect for growth, I think, is going to be somewhat more positive than we've seen traditionally.
What are your thoughts, Heather? I like your commentary. I saw you nodding quite a lot, so I think you liked that Mike had apartments and units and townhouses.
Definitely, because I am like a stuck record on this. So I'm going to say Gold Coast, always the Gold Coast. You know that's like my standard answer for everything. I've travelled Australia twice, the whole of Australia, extensively, and it is the most livable, wonderful place there is in all of Australia. And we're a growing boutique city. So we continue to grow, but we also kind of hemmed in, right? So we've got this amazing infrastructure that's continuing to build, but we're limited in our land and how far we can stretch. So to me, that signals continued growth in prices as, supply and demand. So we can only supply so much in the space that we've got. And because it is such a livable place, then your rent is also quite high. So it's, you're not just paying the high prices, but then not getting the rental yield. You're getting the great rental yields as well. And onto what Mike was saying, which I just love, the boutique apartments. Gold Coast is full of them, like the 12 apartment, 1960s, 1970s built. They're around that 800,000 that was asked for. And so, and the townhouses as well, they have both the apartments and the townhouses. And I think that they make a really solid, personally, and, I'm not telling everybody to go out and buy on the Gold Coast. I'll be upset with you all if you do. But yeah, I think the Gold Coast, always the Gold Coast. It's, good value.
There you go. I want to know, what is the proportion of investors that are looking to what does the future hold for property investment in 2026? Like, what intention and optimism is there in the market and percentages? We've got some data there to share, and you shared it, but bring it up.
Yeah, from the PIPA survey, there's a lot of optimism, I think. So nearly 60% of investors believe the next 12 months is a good time to buy a residential property. And that's a big jump up from 45.7 in 2024 and close to the highest we've seen at 62% in 2021. And that's when interest rates were at record lows. And, people are doing that now. 28% of people have purchased property in the last year. So it's a bit of a turning point. So I think people are quite optimistic, and that's mostly pointed at Melbourne right now. 41% of investors see Melbourne as the best place to buy right now, and that's jumped from 26% last year. And so after that, they're talking sort of Brisbane and Perth, but yeah, Melbourne's definitely getting a lot of optimism. The top reasons why people said it's a good time to buy is good long-term capital growth prospects, 70% of people, population growth, 59% of people, major city capital appeal, 52%, high demand, tight supply at 42%, and 35% the housing shortage. And that's something I've got some sort of data on that I think is perhaps bad news for society, but good news for property investors. And there's the supply side is not coming on in the way that that the policymakers or politicians had hoped.
Jeez, yeah, it's interesting that sort of the thing I would say about Melbourne is, and Victoria in general, is you have to be really onto it with your due diligence. If you're doing it yourself, if you're using it, because you've got minimum standards issues, you've got challenges with contracts. If you're, not to throw some water on the Victorian fire, actually that's funny, Victorian fire, not funny, I'm sorry. But yeah, you sort of, then you've got, okay, if you, to exit a contract for pest and building, typically it has to be structural, my understanding. Of course, speak to your conveyancers, all that. So there's those potential gotchas you just need to be really careful of. But it seems that it's not necessarily deterring people. Yes, there's land tax as well. I saw somebody today in a comment saying they're paying $80,000 in land tax. I was like, oh, okay. I mean, yes, they may have inherited it, which means that they may not be as wealthy as it may just be inherited, which then creates a challenge. But yeah, Heather, what are you kind of in your sort of circles, your I suppose coaching and accounting, are you seeing people still interested in property investment anecdotally for 2026 and beyond, or is it
definitely yes, everybody's interested. Most people are feeling a little bit concerned, have we left it too late? So a little bit like I was talking about before, have we left it too late? They realize that they're not going to get those big growth figures, and then they're a little bit concerned, well, around affordability. So it's all of that. And the conversation I'm having at the moment is, well, strategy stacking is putting together a couple of strategies to be able to afford it sooner, making sure that you are paying down that debt, which is something I noticed in that PIPA survey, is that I think it was it number one, Mike, that people wanted to reduce debt is the reason why those investors were selling.
Yes, yeah, reasons for selling,
yeah. And so that's what people are nervous, they're feeling like, oh, I'm going to be getting into big debt now. And we are talking big numbers for these properties. Those cheap properties, they're so hard to find now. They really don't exist anymore.
Yeah. What's happening in the depreciation space? Give us a little 30-second to 3-minute. You decide how long you go through this. What's happening in that space? What can we get?
Well, in some respects, there's a bit of a race to the bottom happening there, and it's a bit of a disappointing to see in an industry that I've been in for a long time and love quite dearly. You'd be hard pressed to find anyone more enthusiastic about tax depreciation than me, probably for good reason. But look, the biggest thing that I'm seeing is that there are quantity surveying firms that are doing depreciation reports without physically visiting the property. And that's just a bad idea for a million different reasons. I'll give you a quick story. At the Accounting Business Expo, someone came up to me a few years ago and said, I got a report on a service station. I said, oh, that's good. They have great deductions. And he said, well, they put a photo on there. And I said, oh, some quantity surveyors do that. Some don't. Like, we don't. We can give you photos if you need it. But what they were trying to get at is that the property, that the photo that they had on the report was actually the service station that was demolished for the service station that he purchased as a brand new going concern. So a quantity surveyor did a report on something that doesn't physically exist in the world anymore. And I just find that quite shameful. And the Australian Institute of Quantity Surveyors has been very, very clear. There's really only one way that you can do a report without physically inspecting it. And that's if you build a brand new property, you know the exact construction costs, you have a full detailed set of plans and a schedule of finishes. And I know house and land package people that still insist on getting a physical inspection done anyway, because sometimes it'll say carpet to living areas, and carpet has a way higher depreciation rate than tiles. So is the hallway carpeted? That isn't necessarily on the plans. Or it might say stainless steel appliances. Now, is it a Technica appliance or is it a Miele appliance? It makes a big difference. So, that's kind of the battleground at the moment, and it's something that's giving me the shits.